Welcome back, ladies and gentlemen, for another YouTube video, wherever you are, whatever you're doing. Happy Friday. Hopefully you're having a fantastic one. This is going to be your daily cryptocurrency market update. We've got some really interesting things to go over in this video. Just to set out what we're going to be looking at, I'm going to start things off with, again, a little bit of a foreword on Base, which of course is Coinbase's layer 2 that is built on top of Ethereum. It's Coinbase's own blockchain, essentially. Now, I have an opinion on this, that they are essentially going to take over the DeFi space. Why would people choose to make DeFi harder for themselves if they aren't already DeFi native and know how to DeFi when they can just do it through a Coinbase application? You know, the apps that will win in the DeFi space are the ones essentially that make it easy for the users. And it's my opinion that the majority of people, and this may not apply to you, within the crypto space are really here as speculators to make money and largely don't care about decentralization. So is this negative for the entire space? I'm going to give a little bit of a foreword on this. We did do a longer video on it yesterday, so I won't spend too much time on it. Of course, we're going to be looking at Bitcoin and the price action. I'm going to be reiterating what you guys need to look at. You essentially need to keep an eye on the dollar, and probably more important than the dollar, the 2-year US Treasuries. The 2-year US government bond yields, because this is how markets are pricing in interest rates. We've seen this readjusting and this rejigging of interest rates in terms of implied since the start of February, and you can see the majority of markets have sold off with this. And if this continues to climb, it means that interest rates are going higher, and that essentially means that markets are going to continue to see some real downside in terms of pressure. This is also very interesting. This is from Cross Border Capital. Economic surprises. Here may be why China's latest liquidity boom, people's banks, liquidity injection, orange line, according to Cross Border Capital. So Cross Border Capital is somebody I largely recommend following. You guys will know that I think, if you understanding liquidity is one of the most important things that you can get your head around as an investor, because liquidity is just money. That's all it means, essentially. Or value, I guess, in the form of treasuries and debt and all this sort of stuff. But debt really is just money. Or I should say money really is just debt, certainly of the fiat kind. And this is projecting that the People's Bank of China is actually going to continue to inject liquidity. Remember, China actually just opened for the first time in nearly 3 years. And we've seen stocks do rather well off the back end of that. We've seen certain Chinese stocks do extremely well. And also we had news out of Hong Kong potentially allowing Bitcoin and Ethereum to be traded in a regulated manner. We'll look at some comments from Jamie Dimon, also the IMF. But really, where I want to kick things off, guys, before we dive into it all, is recapping on what took place yesterday. Apologies for not getting a daily news update out today, guys. I've been in meetings all morning. And essentially, we covered, it's been a lackluster day for the news, but we covered the main kind of headline yesterday, and that was Coinbase coming out with their own layer 2. They're using Optimism Stack. And of course, it's going to be built on top of Ethereum. Massive win for Ethereum. You can see they're already looking to deploy an ecosystem. And actually, this is going to take over the DeFi space. And I'll tell you why. Because if DeFi is easy to use, people will go to where it's easiest. Okay, if they just have to have one app where they can do everything, they'll use that. They won't bother setting up MetaMasks or their own wallets. And they'll just essentially go through Coinbase. This Base blockchain will already have essentially, the largest users out of pretty much any blockchain. So 110 million verified users with 80 billion in capital. So this instantly becomes the third largest blockchain, essentially, potentially. And in terms of users, well up there. You're talking, maybe even, I don't even know how many users or wallets Bitcoin has. But inherently, because Base is built on top of Coinbase, it will have 110 or access to 110 million people. Instantly becomes one of the largest projects. Guys, a quick bit of alpha here. Look at the projects that are deploying on Coinbase and Coinbase plan to utilize, because it's very likely that they're going to do quite well with an influx of this. Because if you think about people using the Coinbase app, they're going to use the DeFi that's available on it, and the DeFi that's available on it is largely going to be chosen by the centralized company. It's my opinion that the majority of people in crypto don't care about decentralization or any of the philosophical values that Satoshi brought to the table. That's their own prerogative. I still think a lot of people still have their head well and truly in the sand when it comes to the financial system and just how messed up it is and how messed up the world actually is right now. But I'm not here to judge anybody. You know, we're all nobody's perfect, and we've all got, you know, our own demons, I guess, that we battle. On a bit of a side note there, but that just to make sure that doesn't sound like I'm hating on anybody. If you don't care about decentralization, that's your own opinion. But this is largely going to take over. It's a massive, massive win for Ethereum. It's going to be an alternative to Ethereum, but ultimately interoperate with Ethereum. They're on Optimism. Optimism saw a really good day yesterday in terms of the price, but we'll see what takes place. So this is literally going to take over, in my opinion. Again, a little bit of alpha, guys. Come and check out the projects that they're going to use, because these are largely going to be winners. And actually, I would argue that Coinbase has been listing newly a lot of these projects. Very, very interestingly. But yeah, we can talk about this in a lot more detail. We'll dive into it. If anybody wants to find out what I'm buying, what I'm not, feel free to join the Patreon, as always. Let's talk about a little bit of price before we get into some news. So, nice clean chart. This is what we're looking at for Bitcoin right now. Now, we did have a neckline of here, and we did say this wouldn't be a perfect head and shoulders. And it still may be the case, guys. You know, I'm not 100% convinced that you're going to get this right shoulder. I'm really not. I think Bitcoin, if you look at this as a structure and a kind of basing structure and a bottom structure, you can actually see this all over charts in terms of, you know, this is very common structure that you make on the way out of a broader downtrend. You know, we've looked at all the reasons why we decided to put money back into the market around about the 5th of January, or certainly that was when I first had a meeting with my patrons where we looked to make a plan. And the price has done very, very well. And I expect it to continue. Now, we are highlighting the possibility that maybe that wasn't the neckline, which would imply that this wasn't the head and shoulders in play. This is your right shoulder. And that maybe actually this is more of a complexed head, and you're now about to get that right shoulder. And we've looked at levels where we think that may come back to. So what have you got to watch? What's a bit of full guidance? Well, if you want to look at levels that it's going to come back to, you guys can do this yourself, and I encourage you all to do so. Start using Fibonacci's. Okay, Fibonacci comes from, it's a natural sort of law. It's weird how it plays out in the chart. I've got a book from Constance Brown. It's Bloomberg Marketing Essentials Technical Analysis. It was a great book to read. Really opened my mind to Fibonacci's. But plot some of these levels on and look for, you know, you don't really want it to run the 50. You run the 50, you know, typically you've got a better chance of it continuing to run past that. But look for these levels for it to come back to in regards to this right shoulder, if we have one, guys. So it's not guaranteed, and we could have already had the right shoulder, and this wouldn't be a complex end, that would be the right shoulder, and we're set for more upside. But it's not a bad thing if this is perfectly healthy structure. And you could do something like that and set up. Okay, that's healthy. There's nothing wrong with that at all. And actually, that's very bullish, because if that is the case, it gives you a target of nearly, depending on whether you're using log or non-log to get your target, either around about the 40K range or the 37K range. That's where I think Bitcoin's going. I think this is going to couple up with, you're going to get this right shoulder. If the dollar continues to beat its chest, we're potentially looking at something like this. My squiggles are more than squiggles. They're insights. If the dollar continues to rise and your 2-year yields continue to rise, remember this is interest rates and how they've been priced in. So you want to see this fall, put the Bitcoin chart over it. Now, Bitcoin's been a little bit of an anomaly, if I'm being honest. Probably been better putting the stock market over it. So you can see, if you look at typically what's happened with markets, and Bitcoin's been a slight anomaly, the start of February, everything started to sell off. So if we put the stock market on there as well, which is more accurate, you can see this zone here where we sort of started to get interest rates getting priced more aggressive. Generally, everything's sold off in accordance. The dollar's gone up. Bitcoin had a bit of a pariah. But if this starts to roll, stocks will go like that, Bitcoin will go like that, and the dollar will go like that. And that's what we want to see. And that's what you should be looking at in regards to this head and shoulders and where it comes to. Because if we get that turn in the 2-year treasuries and the dollar, then, you know, this may not happen. And you may have a little bit more of a shallow correction. You may just come down to here. Let's draw it again, guys. You may just do something like this and then set up and you're off. And you'll be back above into this range in no time at all. And what do you think your altcoins will do on that backdrop? There is also the alternative, whereas if we did get this neckline right, this is just a retest and is exceptionally healthy. Very, very healthy. And actually, this, to be honest with you, what's happening right now looks like some of the altcoins before they went like that. Literally. So I'm not going to be too greedy in how I'm playing this. Again, if you want to find out more about that, please join the Patreon and you'll get my buy alerts. You'll get we don't give trading signals. Anybody that offers you trading signals, don't give them the time of day, guys. I have spent tens of thousands to learn how to trade, to learn how to do technical analysis. You can see my technical analysis is very, very simple. And that's all it needs to be. People overcomplicating. These people offer you trading signals. Ask for a track record. Ask to see their trading account. They will not show it you. I guarantee it. Or they won't show you one that hasn't been tampered with. Trading is not that easy, guys. Yes, there are, I'm sure, people out there that will give trades. There'll be good trades, but the majority of people offering signals and this kind of silver bullet to trading, take it from somebody who's been here for a while now. It doesn't quite work like that. So this is really what we're looking at. Watch the 2 years. Watch the dollar. Altcoins actually don't look too bad at all. They're all kind of, I better take the eye off just in case I've got any draws on here that I don't really want to share. But they're all at this similar kind of point, you know. Chainlink essentially has broken out of that, come back to retest it and found a bit of strength. ADA, we've already given a big update on ADA. I think ADA is going to break out. It's not going to be long before it breaks that 42 cents mark and you're off. Algo doesn't look bad. These don't look bad. They look like they're calling up for continuation. And it's really going to depend on the dollar, what Bitcoin does, and we're watching all these things. This is just interesting. Markets are all about liquidity. We're seeing liquidity continue to get drawn down from the US and Europe. However, in the likes of China, we've seen actually a liquidity injection, and that's projected to continue. This is from Cross Border Capital. Somebody's well worth following. Jamie Dimon says the Federal Reserve has lost a little bit of control of inflation. Cheerful as ever. CEO Jamie Dimon said Thursday that containing inflation remains a work in progress for the Federal Reserve, while noting the US economy continues to show signs of strength. I have full respect for the Federal Chair Jerome Powell, but the fact is we lost a little bit of control of inflation. Jamie Dimon said in an interview with CNBC, Jim Cramer during the halftime report. It's the first of a two-part interview with Cramer, with the second airing yesterday. So I've not actually caught up with that. But have they lost control, or are we just seeing a bump in the road? I think we are seeing a bump in the road. We kind of expected a bump in the road. If you look at, your commodity basket, and you should still be paying attention to this, if you look at actually February, so this month, a bit of forecasting, you're kind of doing what you did last month. And we might end up in this kind of stagnant, inflation ain't really going down anymore period. So keep an eye on all that. So to wrap things up, this was also from the IMF, talking about crypto policy framework, including non-crypto legal tender. I don't really want to spend too much time on that. But yeah, this is really what we're looking at, guys. We want to see this taken or held an upside, broken, head and shoulders, upside. Where are we wrong? Well, get your fib up, look at the 50%. I wouldn't want to see that 50% retracement hit. And where I'm wrong, you can dip a toe under it and deviate is when you come and take this shoulder out. And I'd say actually taking the shoulder out, you're looking at about 18K. You take that out, we're wrong. We have to admit that we're wrong and we have to prepare for more downside. All I've got for you in this video, guys, if you enjoyed the content, like as always, appreciate it. So as a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gentlemen. See you in the next one.